I mean, are all HPA, I mean, you've described several processes in the past, right? I've looked at companies with HPA and they, let's say they have a very turbulent journey.
Yes.
And so what makes you guys different I mean, it sounds simple, right? It sounds like a go and dig it up and everything else, and it's in a lake, So what makes you guys different from that point of view?
Yeah. So look, for investors not familiar, you can probably classify the HPA players on the ASX into three main groups. The lead candidate and the absolute exceptional performing company in this space is Alpha HPA, code A4N, run by a guy that I know, Remus Karitis, and they've done an amazing job by commercialising the processing of a chemical feedstock. So 5-6 years ago, A4N, or Kohlrabi as they were at the time, had a nickel laterite project in New South Wales. They came up with a proprietary process, solvent extraction, to basically produce high purity alumina from this laterite project. However, during that process, they then discovered that they could use the same process to use a chemical feedstock and still produce high purity alumina and related products. And that chemical is basically a waste material from Orica, the large explosives and fertilizer company. It's a byproduct of their processes, and so they jumped out of the mining space and are now producing this chemical feedstock. Now, the capex and the opex for that process is going to be the same as other hydromet processes. So there's no advantage there apart from the fact they are significantly cheaper than the current incumbents. And so they're hitting it out of the park. So over the last 5 years, their market cap has gone from 20 mil, 20 mil to pretty close to $1 billion. Because they're now nailing contracts, they've done the hard work, they're producing material, not yet in bulk, this is only stage one, they've still got to raise the capital to get into the larger stage production to hit their end target, and that's been a huge success, and all congratulations to them for doing that. So that's the chemical feedstock. There's other companies, there's Chemex, they're trying to do a chemical feedstock. There's I've forgotten the name of the company now, but some of the red dirt that we mentioned before, there's a company trying to produce it from that. So they're sort of non-mining products.
Like the tailings from the traditional.
Like the tailings from the traditional process, in through there. And again, regardless of the process, the thing to remember is that the capex and opex are significantly less than the current incumbents, the Sumitomo's of the world, who are the main producers. So the next group of companies are the kaolin producers, so FYI, Andromeda, etc. And they have struggled in that space. And I think the principal issue with that is the capex required to be able to scale up their projects, and also it's a sort of a 2 to 3 year process to engage with the end market, the end users of the product. They have to take the material, they've got to produce whatever it is that they want that they produce, they've got to test it, it's got to go through quite a rigorous set of physical and chemical processes to make sure that they can use it on an industrial scale. So there's that lead time, and that's a big issue for us that we're facing and moving forward. And but they've struggled really to gain traction enough to be able to raise the capital to certainly consider doing the larger scale projects. And then there's basically little old impact at the end in through here, and so we have a sulfuric acid based project, and we can talk a bit about the differences there in detail. And so that's one of the things that makes this project unique. It's at the front end where the mining and the processing are relatively cheap and relatively straightforward, which means that we have a chance at coming in of being one of the lowest cost producers, if not the lowest, who knows, and be able to produce material in bulk and be a dominant player in the space. And if you recall my comments about being in the industrial mineral space and bulk commodities, that's crucial to your success. And so that's really what we identified in this project. It has the potential to be that.
Can you give us an idea of the magnitude of capex we're talking about between the three sort of groups that you've just described?
Yeah.
I mean, are we talking about hundreds more, or with tapping the billions more, or
No, it's in the hundreds. It's in the hundreds of millions. So I think we're all waiting eagerly for A4N's definitive feasibility study. The one that they've already published was 2020, and depending on how holistically you look at that DFS, you're sort of in the high 200 US dollars to build the larger scale plant. Australian dollars. That was 2020 figures, so they've probably increased, significantly since then. FYI, they were in a joint venture with Alcoa, and that was a 250 million US deal for Alcoa to earn 2/3 of the project. Obviously, that joint venture fell over recently for whatever reason, but those are the sort of numbers that are in there. Look, it's early days. We will have a scoping study out once our resource is out, but we think that we're going to be at least competitive, if not very competitive, with with those numbers. So again,
I can't dig it out. Are you? ASX might not listen to this.
Yeah, you have to be very careful what you say nowadays when you go viral. So but the scoping study had basically already been done when we looked at the project, because we're quite confident on the resource, even though it's only an exploration target at the present, and the numbers all make sense. So it's like, okay, we've got a real chance here to be a leading player.
Would you expect yours to be lower than the other two, or
if everything comes together? Yeah, I think we can.
According to Plan A.
Plan A, we've got a real shot at being the lowest cost producer by a margin.
Yeah. I mean, that's why we got
There's
so
nothing
many
wrong with
alphabets,
saying that.
right?
That's right. Yeah.
So, so you've got this exploration target out there on your slide. So for the guys that sort of going, hey, this is sounding really interesting.
Yeah.
How do they look at the numbers and say this is good, this is okay, or how do they read those numbers? I mean,
sure. So the actual exploration target, we have to quote a range, as people are aware. So it's somewhere in the order of about 2.5 million to 4.5 million tons.
We'll make it clear. It's not like it's there. You're hoping it's there.
In the case, that's in effect that is the background to an exploration target. So what people need to remember is that we've already drilled it out at quite a density. We know what the assays are. We're putting the resource together, so we're very confident of the numbers that are going to come in. But the drill holes are only 1 to 2 metres deep, and so we've actually got pretty good confidence in where we're sitting. But we have to quote this range, but we're allowed to pick a middle figure, so let's call it 3-4 million tons, but the grade is quite significant. So alumina is Al2O3, aluminium oxide. It's high grade, which means it's sort of north of 24-25% alumina, and we're getting about 80% recoveries in that out of that material. Okay, so to take whatever number I say, take 20% off. So the range of contained alumina is 600,000 tonnes up to about 1.25 million tonnes of contained aluminium oxide. So pick the middle number, it's about 1 million tonnes, of which we can unoptimised get 80% recovery. So it's about 800,000 tonnes of contained alumina in that in the deposit, and the average sale price for that material at 4N, 99.99%, is in the order of $20,000 per ton. So if you took those two figures together, you get a very large number. The value in the top 2 metres of this lake. So it's really an extraordinary deposit in terms of the value that's contained in a very small area.